Take a listen to what Tom Lee just said about markets and this upcoming week, and then I will provide you a little bit more color and clarity on what to expect, specifically around Nvidia earnings.
AI set to dominate and be the theme in the market for the next few days. Could your money be at risk if Nvidia pulls up lame? Let's talk about it with our friend Tom Lee, FundStrat Managing Partner and Head of Research, CNBC contributor, and a guy that remained resolute and strong and long, even when things were looking shaky a couple of weeks ago. Tom, maybe what did you see that others missed?
Well, we're talking about why markets recovered. To us, the April wobble was really a market overreaction to a string of some inflationary data and then a fear that the Fed was going to turn hawkish and potentially raise rates. I think that is pessimism really pushed to the extreme at a time when I didn't think markets were exhausted, that a top wasn't in place. So to me, it was a healthy pullback. But, it's been important to buy in May. I mean, the market's up 6% since then, and there's still $6 trillion of cash on the sidelines. And, investors actually been pulling money out of stocks the last 2 weeks as well.
Did we overstate the importance of just one company, Nvidia?
We did not, because as you sort of set up, Nvidia is really one of the most important companies today because they are supplying a key piece of what is powering all of this innovation in AI. I mean, everything else is really tagging along with actually the value creation because of NVIDIA chips. So it's an important company and an important week.
NVIDIA on Wednesday. If they come in a little weak, the stock's been weak, so it seems like the market is ratcheting down some of the expectations. So give us the scenarios, Tom, if NVIDIA meets or, misses or meets or has a giant beat. What do you think is the implication for the macro market?
Well, it's going to obviously be a disappointment and a negative shock if NVIDIA misses expectations. And, they are very lofty expectations. I would think investors are going to be nervous, but ultimately it would be I think a prelude to a market broadening because investors who own a lot of NVIDIA might want to look for other stocks that are starting to show promise. If NVIDIA beats expectations, because I'm assuming you're going to ask me that, I think it's going to pull money off the sidelines. And I think, again, it probably helps propel a broadening of this market rally. I mean, I think there have been other groups starting to participate, like energy materials this week.
Yeah.
But it would be better to see a beat than a miss.
Yeah, I feel like energy, you look at stocks like a Vistra, I'm not asking you to go into individual names, but a lot of these energy-related stocks have soared because of AI, because they know that the demand for power, literally electricity, is going to soar so high if we actually do complete all these data centers that NVIDIA is helping to, the chips to power all the AI revolution kind of runs through energy. What else, though, besides NVIDIA, Tom, right now? I'm sure the Federal Reserve is on this list. What else matters most to you and Mark Newton and your team at FundStrat for the macro market?
Well, we're, next week there is quite a lot of Fed speak, including Powell speaking on Sunday, but it's a commencement speech. And there is some macro. I don't think it's going to be as central as NVIDIA, but, we have the FOMC minutes on Wednesday. And I think the other AI event next week is really Microsoft because they have something related to Surface on Monday, and then they have the 3-day conference Build starting Tuesday. So it really brings a lot of AI into focus. I actually think a lot of smaller supporting and ancillary like edge companies that do AI are going to do well next week because of those events.
Yeah, I mean, truly next week, we just showed the Federal Reserve meeting dates. Last question, Tom, where do you fall on that? I mean, it's been up and down. We started the year with 6 rate cut expectations? That's toast. I don't think we'll get one. Do you think we'll get any?
I think how many cuts we get really depends on how much progress we make on inflation and hopefully a job market that doesn't stay red hot. I think it's been good to see the job market cooling.
Yeah.
And And inflation, I think it's the components are moving in the right direction. So I'm more optimistic that we'll see more than 2 cuts, which is what's being priced into markets today.
That's pretty interesting. I think Tom Lee is under the general opinion that stocks are probably going to broaden out here. And that's probably why Tom Lee has not raised his year-end S&P 500 price target. Tom Lee has a year-end price target on the S&P. If you're looking at the SPY, which is what most people look at, around 520, around 5,200. Today, the S&P is sitting at about 5,300 or about 530 for the SPY. It seems pretty obvious. Tom Lee believes a broadening out of markets is coming, and that's probably the only way that you actually get further upside from here. Let's be honest. If you're taking a look at big tech, if you're looking at Meta, almost $500 per share, Apple back almost to 190, Google at all-time highs, Amazon at all-time highs, and many other big tech stocks that have done exceptionally well, you have to start asking yourself, are valuations a little too stretched in this area of the market, into your big tech area of the market? Probably. AI as well is pretty crowded, and that's why Nvidia earnings will be very important. So Tom Lee said, if Nvidia beats, then you likely see a broadening out of markets. If Nvidia misses, that's not going to be great, but you probably still see a broadening out of our markets. Capital leaving some of the AI trade and going into other areas. Most notably, I think it would be your small caps and your interest rate sensitive stocks that would see a lot of the capital allocation. Now, that actually started a little bit on Friday. You can see Tesla was up 1.5% up in after hours as well, well outpacing the S&P and the NASDAQ. And what happened on Friday, the NASDAQ was actually negative. The S&P was only up about 0.14% or so. So you are definitely starting to see a little bit more of that dispersion of capital back into some of your interest rate sensitive names. I should point out, Tesla did not have any company specific news or anything really related to Tesla's rally on Friday that materially caused the stock to rise. I do agree with Tom Lee there. If really no matter what at this point, Nvidia beats or misses, as long as it's not, an outright just bad miss, then you probably do see a broadening out of our markets. And I think that's how and if, or why the S&P and the NASDAQ could go higher from here. I think you need to see broader participation from the likes of PayPal and Square and Tesla and some of these other stocks that have really not done anything over the past couple of years. Now, Nvidia reports after the bell on Wednesday. Now, there's really a couple different important things to point out with Nvidia, but maybe this is obvious to a lot of you guys. Nvidia has high expectations. Okay, let's be honest. Nvidia is trading at a very high level. Yes, it's been under pressure in recent weeks, but you're still about $50 off of an all-time high. Expectations are still sky high, and we'll look at the actual expectations as well here in this video. But you're pricing in a lot of good news at this point, and Nvidia was down about 2% on Friday, which this is common, okay? So Nvidia tends to move more before earnings, whether it's down or up. Actually, after earnings, Nvidia doesn't tend to move all too much. Besides last earnings, which last earnings you fell about 10% before the earnings, and then you rallied about 16% after the earnings, so it was actually a net positive gain of about 6%. You did end up running more, but besides last quarter, the quarter in November of 2023, Nvidia actually sold off after earnings. The quarter before that, Nvidia actually sold off after earnings, even though Nvidia has beat and raised quarter after quarter after quarter. If you don't sell off before earnings, what history has showed us so far with Nvidia over the past 4 quarters, you will sell off after earnings. So you either get a sell-off before earnings or after earnings. Now, the sell-off before last earnings was quite notable, right? Nvidia was down 1.68%. It was basically flat the next day. It was down 4.35%, and then it was down almost 3%. And then boom, you had earnings, you were up 16%. So I think when the stock's at $925 per share, you either get a lot of weakness Monday, Tuesday, Wednesday before Nvidia reports, and Tom Lee said investors are going to be nervous because expectations are high, or you get good earnings, blah, 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 whatever the earnings are, and then the stock sells off afterwards. Now, the sell-off doesn't have to be that extreme, right? The prior sell-offs that we've seen were like 8 to 10% over the course of like 2 trading weeks. So the sell-off doesn't have to be like a 20% down move. Obviously, if Nvidia misses, then that's probably what you would be looking at. But it's pretty obvious. Nvidia tends to follow this pattern. You either sell off before earnings or you sell off after earnings. And judging off of what we've seen on Friday, you might get the sell-off before earnings that could set the markets up for a pretty weak start to the week. Nvidia's guidance for this quarter was $23.5 billion to $24.4 billion, which is crazy. Wall Street's doing it again. Now the estimate is $26.7 billion. So Wall Street is a lot higher than where Nvidia actually was. Now Q1 EPS estimates are expected at $5.63 per share. Now, all eyes will really be on the next quarter guidance. Expectation is 28 to $30 billion, which definitely seems on the high side and, well, maybe hard to achieve. There's only so long that you can just go quarter after quarter after quarter of beating and raising by $2+ billion a quarter. Now, as far as economic data for this upcoming week, you don't have much. Like Tom Lee said, you have Jerome Powell on Sunday at 3:30 p.m. Not really expecting too much. Lots of Fed speakers. Inflation data out of Canada. The FOMC minutes Wednesday before Nvidia at 2 p.m. I don't think it's going to be that important, though, because it's backwards looking information. We are going to have a lot of Fed speakers before the minutes, so we're probably not going to get new information. Some secondary data: S&P Global Composite PMI, Manufacturing PMI, and Services PMI come out on Thursday. That's going to be important for the inflation outlook. And then on Friday, you have durable goods orders month over month. You're expecting a big drop from 2.6% last month to 0.3%. So you are expecting, quite the drop. That can be important, but I think the markets are going to be so reactive to Nvidia that the reaction to Nvidia, whether it's a miss or a beat, could be days long. So I don't know just how much of an impact durable goods orders will have, but if you are invested in the markets, you want to pay attention to that number because it's going to tell you how strong the consumer spending behavior still is and whether or not the consumer's weakening faster than, maybe Wall Street is expecting, or maybe they're still holding in there. I don't know. That's why we get the data, and we'll get more information based off of it. So let me know what you think about this information down below in the comment section. Are you bullish? Are you bearish heading into this week and Nvidia earnings? Do you think the sell-off for Nvidia will come before earnings in the beginning of this week or after Nvidia earnings? Do you think Nvidia is going to beat, miss? Let me know what you think down below in the comment section. Most importantly, 3 things. Hit the like button, number 1. Number 2, subscribe to the channel. And number 3, enjoy your freaking weekend. That's the most important thing, by the way. And I will see you in the next one.